It's just, to me, it's such an obvious, clear bet. And, you said price predictions. I mean, I have no idea where it's going tomorrow, or I don't know where it's going to be at the end of the year. Although I mean, I'm guessing maybe 100K or something. But I'm absolutely certain this is going to be 200K, and then someday it's going to be a million, someday it's going to be 2 million, someday it's going to be 8 million per coin. I'm talking that because that's just the natural progression of the growth of a network. Side, I mean, you're going to buy it eventually. People don't realize that. Everybody's going to buy this eventually. I don't think anyone realizes, or I don't think a lot of people realize that. So you might as well buy it now versus waiting and having to pay a lot more for it in the future.
Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Larry Lepard goes over his thoughts on Bitcoin today, the parallels Bitcoin has to the early internet, and finally why he thinks Bitcoin is going to $10 million per coin.
Yeah, look, Bitcoin's a strange beast, and predicting the price moves day to day, week to week, month to month, who the hell knows? And it surprises you almost, at least in my experience. I've been watching it for a long time. I just dollar cost average and hodl. I don't sell. So, the ETFs are an enormous positive development. They really are. They give a lot of money access to the asset, and even today, I mean, the assets. I mean, I think it was down to 60, high 50s, 60. Look, it's still up. I don't know, 40% for the year. I mean, it's not like it's it's not like a disaster. I mean, a year ago this was 30, and a year before that it was 16. So, it's still kind of working, and it's going to continue to work. And so, I think the short-term swings aren't that relevant. I mean, I don't know why the price is where it is today. I don't really watch that sort of stuff that much. I mean, certainly the Mt. Gox coins are a possibility. I would think, I've noticed there've also been a lot of hedge funds that are short it. I think they're going to get their faces ripped off. I also think that one explanation that was given to me, and I think this might make some sense, is that, the halving just occurred not that far ago, a couple months ago, and the miners, their reward was cut in half, and some of them had Bitcoin on their balance sheets, and some of them probably aren't making much money right now or having cash flow issues. And so I think the miners are probably in a situation where the marginal ones are having to sell the coins they've got, keep the lights on. And they're just hoping that the price is going to go higher, but it hasn't yet. And, and we saw the hash rate dip a bit, not hugely, but somewhat. I would have thought it would have gone down more. And I'm guessing that there are probably some miners that are operating uneconomically right now that haven't quite thrown in the towel yet. They're leaving the machines on because they're thinking, well, it's going to come back up. And until we get kind of that capitulation and they say, oh, fuck it, I'm throwing in the towel, I'm turning these machines off, hash goes down a bit more. And then at that point in time, I mean, it can come out of the blue. I mean, we all know how this thing happens. I mean, the thing that's so wild about this asset is the way that it can really move and move fast. And that's why I say, like the hedge funds that are short this stuff, they're about to have a deeply religious experience. I mean, they don't understand. They don't understand that this shit can go up, 50, 100, 150% in months, and so, I mean, you're going to see those shorts are going to get covered so goddamn fast. And, and so I know Samson, I really like him a lot. He says $1 billion, within a year. I sure hope he's right. I don't think he is, but, I'm hard pressed to see how we're not at 100K by the end of calendar 2024. And I think this cycle takes us to 200 or 300K. And maybe at that point in time, we're a little overbought and, we come back around and come back down a bit. But, it doesn't, I'm thinking so kind of multi-year that the ups and downs of the months, and it's just like, in fact, I saw the 6 and I thought to myself, maybe I have something else I could sell. I thought, maybe I should sell that and go grab this right now. I mean, I think if it goes to 50, I'm definitely doing that. I'm selling this other asset. So, because it's crazy cheap at these levels, in my view.
The cryptocurrency market is up today, with the total market capitalization rising by approximately 2% in the last 24 hours to reach $2.32 trillion on July 1. The rise in market cap includes gains from Bitcoin and Ethereum, which have risen around 2.5% and 2.2%. Major catalysts driving the crypto market upward today include a divergence in the macro environment, reducing sell-side pressure, and a strengthening market structure. A closer analysis of the crypto market's recent performance reveals that it has begun gaining strength since the Federal Open Market Committee meeting on June 12. The FOMC meeting largely met investors' expectations by keeping the Fed funds target range unchanged at 5.25%–5.5%. The drop U.S. inflation reflected by the Consumer Price Index came in softer than expected. Last week, the real gross domestic product print came in slightly higher than expected at 1.4%, adding to the improving market sentiment. In addition, the Personal Consumption Expenditures report, released on June 28, along with a slowdown in key areas such as the U.S. labor market in recent weeks, appears to have increased the prospects of at least 2 interest rate cuts by the central bank this year, likely in September and December. The latest data from CME Group's FedWatch tool showed a 58.2% and 43.3% chance of rate cuts at the FOMC meetings on September 18 and December 18, respectively. When evaluating the crypto bull market over multiple timeframes, trading activity can be broadly characterized by increased volatility to the upside, with numerous corrections and consolidations along the way. Markets do not always move upward, creating a gap in supply and demand dynamics that causes local and global price correction events. One way to evaluate supply and demand is to examine the flow of stablecoins in and out of exchanges. Data from CryptoQuant shows the average size of the total amount of the top 10 UST transactions outflowing from exchanges. Analyzing the trend from 2023 to the present, the chart reveals a decrease in outflows after a strong surge, indicating that the large-scale selling pressure on exchanges is diminishing. This reduction in outflows suggests that investors are more inclined to hold their assets rather than withdrawing cash from the market.
Well, I don't think anybody's missed the boat. I mean, I think we're still very much in the early days, and it's going to 10x, and that's going to 10x again. So, I mean, from an investing point of view, you don't want to miss something that's going to go up 100x and maybe 1,000x if you talk 15, 20 years out. So I don't think, and point one is going to be a meaningful amount to have. I mean, it's being a whole coiner is going to be an enormous deal in a few years. And so, I don't think you missed the boat. I mean, I think you've got to understand, what's going on here and the way this can continue to compound in value. I mean, you cited the Microsoft example, and I told the story in Madeira, when I was on the stage with Sailor and Lynn and Preston, and I bought Microsoft at what would now be split adjusted 6 cents, and the stock is worth hundreds of dollars. And so it was, like 4,300 times your money, or, 4,300 times your money, right? I mean, it's nuts. And, I bought it in, this was in 86 when they came public, or 87. And I sold it a few years later in order to buy a condominium because I'd made money on it. I'd gone up 2 or 3x. It's been a good investment, but I needed the money to buy, a place to live. And I'm not angry at that decision. I'm angry at the fact that I didn't sell 2/3 of it and keep a third. Do you know what I mean? And find the other third somewhere else. I probably could have found it. There's something I could have, done. Some way I could have gotten the other third. But anyway, so I think that the key is people don't understand the value of compounding something at 20, 30, 40% a year over a bunch of years. I mean, this is how great fortunes are built. And so, and this is a truly unique asset.
This could imply that investor sentiment has turned more positive as seller exhaustion sets in. Meanwhile, Bitcoin's spot price has crossed below the realized price of short-term holders, which was at $62,600. Currently, STAs are experiencing slightly negative average profitability, a metric that has historically been used to identify periods of seller exhaustion. From a technical perspective, the crypto market's gains today are part of a rebound that started at a support confluence comprising the major support at $2.182 trillion and the middle boundary of a descending parallel channel. The total market cap, currently at $2.276 trillion, broke above the upper boundary of the channel during the July 1 recovery, signaling a breakout from the downtrend. As a rule of this technical formation, the crypto market could rise toward the $2.52 trillion area, embraced by the upper tip of the declining channel. Before achieving this, the total market cap has to overcome supplier congestion between $2.30 trillion and $2.358 trillion, where all the major moving averages lie. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.